Thank you, Bing. I'd like to proceed to the next item in the agenda, which is the report of our president. I'd like to request Joe William now to present and report to you the financial condition and results of operations for the year 2011.
Good morning, everyone, and thank you for joining us today. A record performance of 5.1 billion core income for 2011 is an important achievement in light of the challenging environment last year. Ranked in terms of relative performance, contributions from the hospital group showed the biggest improvement at 44%. This was followed by Maynilad at 30% and Meralco at 13%. Metro Pacific Tollways contributions were also up by 2%, but this reflects strong underlying performance of its operating subsidiary, considering that the tax holiday had expired starting in 2011. In aggregate, MPIC's share in the core income of its operating companies grew by 18%. It is my pleasure to now explain how this improved financial performance was achieved. Maynilad contributed 3.1 billion, almost half of all the income MPIC derived from its operating companies. In 2011, Maynilad reported a 24% increase in core income on the back of 8% growth in billed volume and a 6% increase in average tariff. It also met its non-revenue water target, an important metric for tracking capital expenditure efficiency. Non-revenue water averaged 47.8% for the year, meeting the 48% target set by the regulator, and further improved to 42.2% by the end of the year. Our ability to conserve water gave us the supply needed to surpass the population coverage target of 90% and reach over 1 million connections, or 92% by year end. Meralco increased its contribution to MPIC by 13%, reaching 1.7 billion. This arose from the 23% improvement in Meralco's core income in conjunction with an increase in MPIC's economic ownership. Meralco's core income benefited from tariff adjustments granted in 2011. These adjustments were supported by excellent operational performance at Meralco. System loss was at an all-time low of 7.4%, while other service performance indicators were within target or reward range. MPIC increased its effective shareholding in Meralco from 17.4% at the beginning of 2010 to 22.7% at the end of 2011. However, since funding was raised through straight debt and redeemable preferred shares at the Beacon level, the resulting interest expense dilutes the effect to MPIC of the increased profitability and ownership in Meralco. At Metro Pacific Tollways, a 1% decline in vehicle entries and 3% reduction in kilometers traveled was offset by an adjustment in tariff for inflation. Implemented at the beginning of 2011, revenues grew by 10% for the year. Expense management was responsible for the faster 12% growth in EBITDA. That EBITDA means earnings before interest, taxes, depreciation, and amortization. Refinancing of debt to take advantage of lower interest rates resulted in a further 23% growth in pre-tax core income. Bottom line, core income was maintained at 1.5 billion despite the expiry of MNTC's tax holiday starting in 2011. The hospital group showed the greatest increase in contributions to MPIC's core income at 44%, a 17% improvement in the profits of the operating companies, coupled with management fees we started collecting in 2011, were responsible for the increase. Our outpatient services were a strong driver of profit at all hospitals, and this was augmented by the first full year of contributions from Riverside Hospital and Our Lady of Lourdes. At the schools affiliated with some of our hospitals, the rehabilitation continues. We have appointed new chief executive officers in 2 of the 3 hospitals, and dialogue with potential venture partners for the operations of these schools is progressing. Progress at each of our businesses reassures us that we are laying the groundwork for more growth going forward. We expect growth to come in 3 waves over the rest of the decade, with Maynilad leading the first, MPTC the second, and Meralco generating the third. The hospital group is expected to maintain high growth throughout. Growth over the next 3 to 4 years will be delivered by Maynilad, connecting to the remaining 1.6 million customers in its concession area that are not yet connected to its pipeline network. That represents a 20% growth in customer count. Additional growth in billed volume is expected from the capita consumption effect of increasing water pressure from the current standard of 7 psi to at least 16 psi, and ensuring that water is delivered 24 hours a day to all customers. The tariff adjustment for NLEX in 2013 to reflect inflation will also boost earnings. However, it will be the completion of several road projects in MPTC's pipeline that will be the impetus for MPIC's growth from 2016 onwards. Harbor Link and Segment 8.2 are expected to be operational by 2015 and 2017, respectively. SETEX, which we hope will finally be turned over to us within the year, should start contributing meaningfully to profits and cash flow by 2017. Meralco has plans to reach 2,500 megawatts of generating capacity in the medium term. Profits from this venture should start hitting the bottom line significantly by 2017. The government is implementing open access and retail competition in the second half of 2012. Meralco is already positioning itself to be a major retail electricity provider upon implementation. It will take 7 years for all customers to participate in open access. Meaningful profits from this endeavor should flow to the bottom line in the latter portion of that timeline. At the hospital group, the 2 hospitals we acquired at the end of 2011, Cardinal Santos and Asian Hospital, should give a nice boost to core income with their full-year contributions, and we are still looking to add more hospitals to the portfolio. Further, the hospitals we own are either in the midst of executing their expansion plans or have not yet reaped the full benefits of the capital expenditure over the past few years. Finally, as we inch towards our target of 3,000 beds, we expect these hospitals to evolve into a cohesive network to further boost value and enhance patient experience. None of the projects we have identified are a part of the PPP program initiated by government. As such, while the list of projects up for bid is comprehensive, attractive, and will raise the level of infrastructure development here to that of our neighbors, we view participation in those projects as a way to augment growth already inherent in our existing portfolio. In line with this, we have entered into a partnership with Ayala Corporation to jointly pursue opportunities in the light rail sector. We each bring financial strength and a strong reputation for corporate governance. This should make us the bidder to beat when we combine that with MPIC's extensive experience in rehabilitating infrastructure and Ayala's expertise in real estate, banking, and the infrastructure sectors. The message I would like to convey is that we have sufficient opportunities in our existing businesses to grow our core income substantially. but we are still working hard to maximize our chances of augmenting growth through the PPP initiative of government. Our efforts have started to bear fruit. From the lowest price point of the stock this year, the end of January, the stock has risen by 16% as of the third week of May, more than double the 7% increase of the PSE index for the same period. We hope that as we continue to deliver on our potential every year and show you our plans for the future, you continue to join us for the journey. Thank you and good day.
Good, thank you, Joey. The floor is now open to questions from our shareholders. Please be reminded that only shareholders of the company are entitled to ask questions at this time. Before asking your questions, please state your name for the record. Thank you. Are there any questions from the floor? Okay, please.